Twitter flies out of the stock exchange as Elon Musk takes the company private. Sources tell CNBC Twitter CEO Parag Agrawal, CFO Ned Segal, and Policy Chief Vijay Gadde have been fired with severance costs totaling up to $200 million. Musk is likely to take charge as interim CEO. Apple's global iPhone sales fall short even as revenue from India hits a record high. Amazon shares also plunge after sluggish holiday sales forecast. The big tech rout continues on Wall Street with $800 billion in valuation being wiped out just this week. Maruti Suzuki cruises into the second quarter. Margins come in at a 7-quarter high as raw material costs fall. Management says they are sitting on an order book of over 4 lakh cars. The stock rallies 5%. Online marketplace Flipkart's losses widened by 51% in FY22 to nearly 4,400 crore rupees. Expenses rise more than 36%. Revenues rise 31% to cross 10,000 crore rupees. New age companies that listed on Dalal Street are staring at a nervous November. Nykaa, Paytm, Paybe Fintech, Delivery and others will see shares worth 1 lakh crores get unlocked as pre-IPO lock-in is set to expire. Vladimir Putin says he has no intention of using a nuclear weapon in Ukraine, says the war is part of Russia's wider struggle against Western domination. Also praises Prime Minister Modi's independent foreign policy, says both nations share special ties. The European Union strikes a deal with its 27-member countries to ban new cars with combustion engines by 2035. Cars currently account for 15% of all CO2 emissions in the EU. Members of the United Nations Security Council paid tribute to victims of 26/11 Mumbai terror attacks, promised to bring the perpetrators to justice. External Affairs Minister Jaishankar says India will never forget and never give up. And no festive cheer for Bollywood. Box office collections yet to pick up and footfalls at multiplexes remain well below pre-COVID levels. Well, we start India Business Hour with the big story. Elon Musk is now in charge of Twitter, finally. The Tesla founder had until today to finalize the $44 billion acquisition, or he had to face trial. Twitter shares will now be suspended on the New York Stock Exchange today and will be removed from the S&P 500 on Tuesday. The stock has gained 25% this year after Musk's proposed acquisition. Now, sources tell CNBC that Twitter CEO Parag Agrawal, CFO Ned Segal, Policy Chief Vijay Gadde have been fired with severance costs totaling up to $200 million. Gadde is likely to walk away with a hefty severance pay of $74 million. That's more than the share of Parag Agrawal and Segal. Musk is also understood to take charge as interim CEO. He's also planning to reverse lifetime bans, especially on former US President Donald Trump. So how is Elon Musk financing this mammoth acquisition? Arjun Karpal is here with more. Arjun.
We have got confirmation this morning from Binance, the cryptocurrency exchange. They were one of the companies that initially said they would back the deal, but earlier this year, they've come out and said they will continue forward with their equity financing, and they confirmed to us that the deal was closed as well. We know the banks are still involved in this. This is, of course, a point of contention here because there are a number of banks, including Bank of America, who'd carried out this debt financing for this deal. But this was back earlier this year when market conditions weren't as rough as they are now. What's going to be interesting to see is after this is all said and done, will the banks be able to shift this debt to investors in an environment where investors are turning away from risky assets and risky debt as well? And that, I think, is one of the big questions here over the financing. We still don't know, but hopefully we'll get some more details as the day progresses.
5 months of uncertainty, 5 months of legal battles, then all of a sudden in 3 weeks, Musk closed the deal, and his immediate thing that he did was fire top executives. And that is not something that's typical in M&A deals. And that is a sign from Elon Musk that he is here, he is in charge, and no one is safe. So it is very uncertain.
We have identified that 600 people left in Q3. And that's a 60% increase, 300 and about 400 people left in Q2. So each month, the number of people who have been departing are about, give or take, going up by about 60%. I do expect that to increase. despite his reassurances that he's not going to be firing people or laying people off, that doesn't necessarily mean that people want to work there.
So Elon Musk now well and truly in control of Twitter. He's already tweeted saying, and I quote, "Let the good times roll." In global earnings, tech major Apple's fourth quarter earnings beating Wall Street expectations after posting a record revenue of over $90 billion, which was about 8% up year on year. The company's earnings per share recorded at nearly $1.3. However, global iPhone revenue missing street estimates, coming in at $42 billion. The company's CEO Tim Cook says Apple continues to perform well in emerging markets, with strong double-digit growth coming in India, Southeast Asia and Latin America. But shares of Amazon tanking in after-hours trade as investors were disappointed with its guidance for the fourth quarter. Now, Amazon expects fourth quarter revenue between $140 billion to $148 billion, but that is still lower than analyst expectation of $155 billion. The company's revenue for the third quarter in line with estimates, coming in at $127 billion. Now, here's what has happened to tech giants. They've continued to suffer massive losses on Wall Street. $800 billion in valuation wiped out in just this week on a cumulative basis. The big tech stocks have seen a staggering erosion of $3 trillion in combined market cap over the last year. The tech rout on Wall Street has also caused the net worth of billionaires like Jeff Bezos, Mark Zuckerberg to fall sharply. The Amazon founder and the Meta co-founder and CEO have seen a combined loss of around $16 billion from their fortunes in a single day. Zuckerberg's fortune plunging by over $11 billion, according to the Bloomberg Billionaires Index, after Meta's disappointing earnings report. His total wealth loss amounts to over $100 billion in 13 months. That's more than any other billionaire this year. And staying with earnings and losses, Walmart-owned online marketplace Flipkart has seen its losses widen by 51% on FY22 due to 36% rise in expenses. Revenues, though, up 31%. Shilpa standing by to break down the numbers for us. Shilpa.
Well, the revenue growth of 31% in FY22 for Flipkart Internet was led by revenues that came from its marketplace services, logistics management and advertising services. Now, remember, Flipkart Internet is the marketplace arm of Flipkart, and this mainly generates its revenues from e-commerce, from IT-enabled services, from marketplace and related support services. Net loss, however, for Flipkart widened by about 51% or by 1.5 times to about 4,362 crore rupees. This is against about 2,880 crore rupees of loss that it saw in FY21. Now, loss was on the back of rising costs of transportation, advertising and promotion, and legal costs as well. Now, let me break down these expenses a little bit for you. Total expenses for the company were up about 36.5% in FY22 to a little over 15,000 crore rupees. Now, this was led by total cost of transportation that was up about 46% for the company. Legal expenses were up about 1.4x for Flipkart, and also advertising and promotion expenses up about 81% to about 1,900 crore rupees. Now, remember, this comes at a time where Flipkart and the e-commerce industry is also reeling from inflation that has been pushing up transportation costs, and also intense competition rising from other e-commerce marketplaces as well. Back to you.
Shilpa, many thanks for joining us. Maruti Suzuki Cruises in the second quarter. Margins have come in at a 7-quarter high as raw material costs fall. Maruti Suzuki Chairman R.C. Bhargav says that the entry-level sales have seen a growth after many quarters, adding that the festive demand for hatchbacks is unlikely to continue for too long. Take a look.
The entry-level segment in this quarter too has shown a growth. It's the first time it's shown a growth after many quarters. But I think this is the result of the festival season. Putting all these new SUVs and things is really what we're trying to do to redefine our strategy. Our composition of vehicles is changing. Instead of having 70-75% vehicles in the hatches, this percentage is going to drop as we go along, as more production takes place of all these vehicles which we just talked about.
Well, that's Maruti. Dr. Reddy is also reporting numbers. All-round beat for Q2, led by a strong drug launch in North America. The pharma major reported a quarterly jump in revenues at over 6,300 crore rupees versus over 5,200 crores. Margins and profits declined during the same period. U.S. revenue came in at the highest level in 4 quarters at over $344 million. Well, the good earnings lifting the mood on Dalal Street today. Stocks ending in the green for the second straight week. The Sensex and the Nifty ended a volatile session with decent gains. Both indices have gained more than 1% this truncated trading week. 39 Nifty stocks ending the week with gains. And staying with the markets, it promises to be a nervous November for new age companies that recently listed on Dalal Street. Nykaa, Paytm, PB Fintech, Delivery and others will see shares worth 1 lakh crores being unlocked as the pre-IPO lock-in is set to expire. Nigel is standing by with more details. Nigel, November rain?
Well, as the name suggests, right, the header suggests that could potentially be 1 lakh crore of supply that could hit the market. And that's because the pre-IPO lock-in, well, it expires for various new age companies. 5 to be precise, they are the larger ones in there at some part of November itself. So let's get the list up for you on the screen. The dates where the lock-in expires, well, that comes up for you on the screen. The companies as well, and how have the stocks moved from their offer price. Now, you'll say that who will want to sell? Because anyways, these stocks have not given any big returns. These are pre-IPO investors. So for them, case in point being a Nykaa, well, the investors have got shares at around 200 rupees. The current market price is close to around 1,000 rupees. So there will be that sort of a temptation to go ahead and take some money off the table, either reallocate it or in fact, just book some profits. So that's the broad list out there. But let's run you through the quantum of shares that could be sold and in fact, the value of those shares as well. For Nykaa, we're breaking it up into two because the total quantum that's getting unlocked is around 31,000, 32,000 crores odd. But half of that is the promoter entity, which in all probability should not get sold. That's at least the way the street looks at it. So the overhang could be for around 16,000 crores odd. For Fino Payments, well, it's a smaller number, closer around 1,000 crores odd. However, the bottom three, they don't have a recognized promoter entity. So the fear is that there could be big supply coming in from there, from Paytm, Delivery, as well as PB Fintech. So you put the numbers together, the promoter unlocked, the total quantum or the value of the shares will be around 16,000 crores odd, while the non-promoters could be close to around 85,000 crores. Put that together, that comes to a 1 lakh crore rupees odd. And just to recap, the last time this happened was for Zomato. Remember, you had a couple of large investors in there. They had come out, then post the unlock, they went and sold shares. The stock price corrected close to around 20% in a matter of a couple of days and went down to around 43 odd. However, investors, they lapped it up because this lock-in expiry coincided with their results. For Nykaa as well, a similar thing could play out because their results are in the first week of November and that coincides with the lock-in expiry as well. So it'll be interesting to see whether or not investors come in there and lap up. They'll have to be a little daring to pick up some of these companies because of the kind of wealth erosion we have seen, and they'll have to be there for a longer time horizon. Finally, there could be two impacts that will play out. One is the share prices will continue to remain under pressure because of the big supply. The second factor is if some of those buyers who are waiting by for this dip, well, they're going to be spoiled for choice because there are going to be plenty of supply that's coming to market. It promised to be a very interesting November for some of these new age companies.
Well, it certainly is going to be an interesting November. Nigel, many thanks for joining us. And speaking of IPOs, audio gear and wearables brand Boat is shelving its plans to hit Dalal Street. The company has raised 500 crore rupees from existing investor Warburg Pincus and new investor Malabar Investments to fuel its expansion plans. Boat will reconsider taking the company public after a year.
3 reasons for us to take a temporary pause. One is we are seeing tremendous opportunities in the wearables or the smartwatches segment. And so the idea for delaying the IPO was to invest significantly in the wearable space. The second is, as we spoke to investors, we found so much interest in Boat that even without doing a formal process of fundraising, we were able to secure these funds in a very short amount of time, which shows the confidence and conviction investors have in the Boat story. And the third, as you were mentioning, is market conditions are somewhat choppy right now.
Well, that's Boat raising 500 crore rupees and putting the plans to head to Dalal Street on hold for now. In other news, the government could be finalizing the framework that will govern the issuance of green bonds by next week. India is looking to issue its first sovereign green bond, which could be used to finance a string of clean energy projects. The finance ministry is already anticipated borrowing 16,000 crore rupees via the green bond route in the second half of the fiscal. This is a CNBC-TV18 exclusive news break. A report published by a top Republican senator in the US on the origins of COVID-19 supports the lab leak theory. The findings of the Senate Health Committee report are interim, and it bears the signature of only Senator Richard Burr of North Carolina. The report does not provide any new verifiable evidence or classified information to support the lab leak claims. Ekta standing by with more details from the report. Ekta, what does it say?
Thanks for that. Firstly, let me say this report signed by the US Senator Richard Burr is based on information which is already available in the public domain. The report suggests it is reasonable to conclude that COVID-19 pandemic was more likely than not the result of a research-related incident. The report cites examples of the pandemic being a research-related incident as the early signs showed rapid spread of the virus in Wuhan, with earliest calls for assistance, in fact, being located near the Wuhan Institute of Virology, or WIV, in central Wuhan. The report points out concerns on biosafety at the Wuhan lab, and it says there was evidence of biosafety failures, which is already known. The report goes on to say that the hypothesis of a natural zoonotic origin no longer deserves benefit of doubt or presumption of accuracy, but points out that more information is needed to arrive at a more precise, if not definitive, understanding of the origin of COVID and how the pandemic began. On the same topic, it points out if the COVID-19 pandemic, the result of the zoonotic spillover of COVID in Wuhan from an intermediate host species, there should be evidence of the virus circulating in animals before it spilled over into humans. Instead, there is no evidence that any animal was infected with COVID prior to the first human cases. Let me reiterate, all this information is already in the public domain. Lastly, the report urges government leaders, public health officials and scientists involved in COVID-19 and working to prevent future pandemics must commit to greater transparency, engagement and responsibility. The report also points to critical outstanding questions to conclude the origins of COVID-19, such as what is the intermediate host species, where did it first infect humans, and lastly, how did it acquire its unique genetic features.
Ekta, many thanks for joining us. Time for us to head to a break, but up next, no festive cheer for Bollywood box office collections. No sign of any recovery or a pickup just yet. That and more when we return. Well, a quick check of other global headlines this evening. Ukraine has claimed that it has shot down more than 300 Iranian-made drones so far. Ukraine President Zelensky claims that Russia has fired 4,500 missiles into its territory since the start of the war. Vladimir Putin says he has no intention of using a nuclear weapon in Ukraine, says the war is part of Russia's wider struggle against Western domination. He further reiterated his claim that Ukraine is preparing a dirty bomb to plot against Russia.
We have published the intelligence data for a reason about an incident with a dirty bomb being prepared. We know where it is done, more or less. There is still some nuclear fuel that has been repurposed. The technologies that the Ukraine has allow them to do that. They've loaded up to Tochka U missile, or they could blow up and say that Russia did that, that Russia has conducted a nuclear strike. But it doesn't make sense for us to do it, neither politically nor military.
Husband of U.S. House Speaker Nancy Pelosi has been violently assaulted inside their residence in San Francisco. A statement said the assailant is in custody. The motivation for the attack is under investigation. Also going on to say that Mr. Pelosi was taken to the hospital and is expected to make a full recovery. In a step closer towards a carbon-neutral future, the European Union has struck a deal with its 27 member countries to ban new cars with combustion engines by 2035. Cars currently account for 15% of all CO2 emissions in the EU. South Korean army claims North Korea has fired 2 ballistic missiles towards the Sea of Japan, closer to South Korea. North Korea has been conducting a series of weapon tests, and this missile launch is seen as a reaction to the joint military drills held by South Korea and the US that have defended North Korea's aggression. Myanmar's military has warned that any pressure from its Southeast Asian nations to put a time frame on a peace plan will create negative implications. The nation has been grappling with political and humanitarian crisis for the past couple of weeks. Foreign ministers from the ASEAN bloc met in Jakarta yesterday to discuss the ongoing situation in Myanmar. The situation remains grim in Iran as the anti-hijab protests continue for the sixth week. Human rights group Amnesty International has said that at least 8 people have been killed in Iran since Wednesday. And you will get a deep dive into all the big global stories on our marquee international news show, Global Eye, coming up at 9:30 p.m. right here on CNBC-TV18. In national headlines, Prime Minister Modi has urged states and union territories to dwell on the idea of one nation, one uniform for the police force. Addressing an internal security brainstorming session organised by the Home Ministry, the Prime Minister said he believed there should be a common identity for the police force across states as compared to the current pattern of different uniforms. The air quality in Delhi has deteriorated, with the index plummeting around 500, sending it to the severe category. Air quality since Diwali was in the poor category, but it has now worsened. The Supreme Court has said it is important to conduct psychological evaluation of convicts who've been awarded death sentences. A bench led by CGI Lalit said these reports would provide invaluable assistance to have an independent and holistic picture of the physical and mental conditions of convicts. Bollywood is in a funk with back-to-back box office failures. The Hindi cinema industry, which was known for content that could draw in the crowds, is now struggling to captivate the audience. Vashishta Oniwala has more. Vashishta.
India is just past the Diwali celebrations across the country, but Bollywood still faces some distress. Undeniably, a poor content show is driving a lackluster box office collection for the Hindi movies, and to add to the weak content, a shift in preference towards consumption of a varied content on a plethora of OTT apps is contributing to the lower footfalls. This is evident in the occupancy levels, which are sinking, and of course, below the pre-COVID levels for PVR and INOX, though the regional movies are faring better than the Hindi cinema. The screen share for non-South markets for INOX is presently at 73% and 65% for PVR. Now let's have a look at how this year has fared for Bollywood. A total of 117 Hindi movies were released in 2022 till date, clocking box office collections of 2,900 crores. And going by the same run rate, by end of this year, we could be 40% short of the box office collections when compared with 2019, which is the pre-COVID year. Crucial to note here that the release dates of multiple movies were either delayed or pushed to OTT platforms. Also, it is undebatable that the film exhibition industry was the worst affected with the advent of COVID, as stringent government regulations made this industry the first to be shut when COVID began in India and the last to reopen when the travel restrictions eased in the country. A deep dive into this year's Bollywood movies collections tells us that without an impressive content, the presence of even big stars failed to attract the moviegoers at the theatres. Evident in the box office collections of big star-studded movies such as Lal Singh Chadda, Ek Villain, Liger, Raksha Bandhan, which largely disappointed the moviegoers. A total of 7 movies clocked over 100 crores of box office collections this year till date. This is to be compared with 19 films in the pre-COVID year 2019. Another factor that would determine the level of box office collections for a movie would be the window of its release between the theatre and an OTT platform. A shorter window usually garners a lower box office collection at the theatre. Big budget movies prefer a larger window as a theatrical experience brings a larger than life experience to the moviegoers, which is accustomed to the actor's stardom. Now the big question is, how will rest of this year perform? Upcoming releases include Avatar, Drishyam 2, Black Panther, while some regional movies in the lineups are Vathi, Kushi and more.
Thanks, Vashishta. Well, producers, exhibitors, and of course, actors will be hoping that the jinx will be broken. That's it then on this edition of India Business Hour. Thanks very much for watching. Stay tuned to CNBC-TV18. The news continues, and have a great weekend.